Good evening. Nice to have you with us once again. As we said last week, we're going to be looking at two things that I know nothing about: venture capital and private equity. As I said, I know nothing about them. That's why we've dragged two professionals in, kicking and screaming, in the form of Mike Donaldson, who's the director at RMB Corvest, and JP Fourie, who's the executive officer at SAVCA, the South African Venture Capital and Private Equity Association. Gents, thank you very much for your time. Nice to have you with us in the studio. Okay, venture capital, private equity. JP,
yeah.
Is there any difference?
There's a big difference.
Right.
First of all, private equity includes venture capital. So venture capital is a subset of private equity, and it's a type of investment that is normally investments into high growth, de facto high risk, startup or early stage ventures that normally have some type of technology or innovation underpinned to those businesses, as opposed to private equity, which then is more later stage type of investment into businesses that are probably more established, generating cash and the likes, and are further along in the life cycle. That's the primary difference between the two.
What are the other subsections of private equity then?
There's very little, Jeremy. I mean, it really is VC, which is venture capital. I think there's a lot of other funding methodologies, if you want to call it that. So you've got mezzanine finance as well. There's a lot of mezzanine funds in South Africa.
Which would be? Which
is really a sort of a gap between debt and equity. So it's a combination. So they would charge more related like a debt rate, but with an equity slant to it. But it's not pure equity.
Whoa. Okay, now, let me get this straight. So you've got Joe Soap,
yep,
who comes up with a thingamagwadgy that fits into a whatchamacallit, and you put a dongle in, and then the overhead combangulator comes in the bottom like that, and it's called an overhead combangulator because it comes in the bottom there, see, so it goes overhead. And he wants to sell this whole thing, and it's absolutely brand new to the market.
Mm-hmm. Yeah.
And he needs money. He's got the invention, it's brilliant, he's going to make gazillions of rands out of it, and he needs the money to start it. So he would go to a venture capitalist.
You'd probably go to something that we would call friendly, the 3 Fs: family, friends, and fools. That's where you go and find the money originally, right? Because no bank is going to give you money for that convoluted product that you're explaining necessarily, because it doesn't have any cash flow and the likes. He's potentially got no assets to go and offset against a loan, potentially. So somebody's going to go and take a lot of risk in terms of funding that individual to try and grow that business. And that we would see as venture capital. Whereas...
Are you saying venture capitalists are fools?
Some of them are, and some of them are rich fools.
I think they're very brave.
Yeah.
Right.
Yeah. But Jeremy, I think it goes back one further. I mean, the first place that the individual entrepreneur would end up would be obviously his bank manager. The first thing his bank manager is going to say is that,
no,
I don't understand this. So I don't understand this. Go find an IT or venture capital firm that understands technology or understands this, this gadget. And that's typically what JP is referring to. So you'll go to either a specialist IT venture capital firm, or you would go to someone like a business angel who's an individual with money. And he's got some, sort of money to burn. And he will take that risk because he just knows the upside could be enormous, or he's going to lose everything.
Okay, so hang on. So private equity funders essentially this is now moving to way end of the spectrum.
Correct.
This is
really early stage.
Correct.
Private equity plays in your later stage, developed businesses, profitable.
So that's where you come with your mezzanine thing.
Correct.
So you've got this guy coming in right at the bottom. Mezzanine now, let's say a family member has lent him the money and he's managed to start getting it going.
Yep.
And suddenly he's got orders in some of the bigger chain stores, and people start talking about, have you seen the new overhead combangulator?
Correct.
That's out. And it's starting to sell. And he needs more money. So is that where he becomes then a mezzanine?
He becomes probably before that a combination, maybe mezzanine, but that is really where you start getting into private equity, where there's sales, there's profits. And I think even private equity per se, looking at stuff which is not profitable yet, also going to be difficult. So that seed capital will have to last him until that product has been proven in the market. So it's not just sales, but it's profitable. As soon as it gets to that break-even point, that's when you've got all the private equity funds will come in, take a stake, maybe alongside a mezzanine financier. Because what the mezzanine financier does, he doesn't take equity like we do. He doesn't take shares in the business. So really, private equity is the most expensive form of lending you can get. But it is, you give the guy some sort of breathing space in his business because it's equity. You're not demanding a repayment date next year of your money back. So he needs that breathing space.
Okay, you're running ahead of me now. You see, once again, when I don't understand things, I need baby steps.
Sure.
Okay, JP, let's go back now to the guy who is in a position where he wants to access some sort of income, or he's prepared to let a shareholding go of his business because he needs the money.
Correct.
What I would like to, at the end of this show, to be able to understand is how I, as an entrepreneur, can access that money that is available because people have put it into a private equity fund. And I would also like to understand how I, as an individual, could get involved in being part of a private equity fund and putting money into it so I can get money out.
Okay.
We've established the guidelines.
Sure.
Yep.
Let's look at the first one now. How do I, as a small businessman
Sure.
who has invented the overhead combungulator, I love that name. I'm actually going to register that name because someday somebody's going to come along and they're going to go, you see, I've got this thing and I don't quite know what to call it. And somebody's going to turn around and say, why don't we call it an overhead combungulator? And I'll own 49% of that overhead combungulator.
And we'll have 51%.
Yeah.
Spoken like a private equity member.
At a good discount. Jeremy, the harsh reality in South Africa and across the world is that to find that growth capital, once you've tapped out a business angel and are looking to climb the proverbial J-curve of your business development until you start to make the gazillions that you refer to, is really tough to break through because those businesses are inherently very risky. Their market is untested. There's a big chance that a competitor will come in and squash the little guy and the likes. But there are a number of financiers that do specialize in those type of transactions. The likes of business partners and the likes that are not necessarily doing overhead combungulators that are very risky. Combungulator.
Yeah, registered.
Registered with a C. Yeah. So they're financing more lifestyle type of businesses as opposed to ones that are deeply entrenched with technology and the likes. What you really need to do is unpack the risks in relation to that business and as the entrepreneur, put yourself in the mind of the financier or your bank manager that Mike refers to and the likes and say, okay, if I was investing in this business, what can go wrong? How can it go wrong? How do I mitigate this? How am I the right jockey for this horse? What do I bring to the table that makes this overhead combungulator work?
Okay, so you've literally got to go out and sell your own product to somebody else who's going to turn around and say, well, if you're so confident about this, why aren't you putting money into it? And that's when you've got to go and say, oh, well, I haven't got any money.
Or I've already put X amount of money in. And
I can't do any more.
I need a partner to take this business to the next step, to get into whatever distribution network, to sell it in every retail store on every street corner. And I don't have the wherewithal to do that. I'm looking for the relationships, the money, the cash, the expertise, and the likes to help me do that. And that's where venture capital is really important, and even on the private equity side. So at the end of the day, we like to think of ourselves as relatively smart capital. We're not only providing with a checkbook and say, cheers, see you in 3 years' time, and hopefully you bring some money back. They want to work with those entrepreneurs to grow that business. They want to forge a partnership with those entrepreneurs to ensure that the business grows. Because private equity makes money by buying into something for 100, and in 3 or 4 years later, selling it back to the entrepreneur or to another buyer for 4 or 5 times that amount of money.
Okay, but hang on. You've just raised something here which I had never considered in this conversation, because up till now, all we've been talking about is money.
Yeah.
But the words expertise and all the rest of it came into it. So are you saying that as a venture capitalist or somebody in private equity, I could be coming in as somebody who has a huge amount of experience in retail distribution and say, look, I'm interested in your product. You've come to me with it. I can't give you any technical expertise, but I sure as hell can explain to you and help you get this into the retail sector, because I worked in the retail sector for 25 years. And on that basis, I don't necessarily have to put money in, but I can bring expertise. Is that what we're saying, or am I reading it wrong here?
I think very much so. I think unfortunately, there is not a huge depth of experience or specialization in South Africa. So a lot of private equity companies or venture capital are broad range. They will look at any industry across any sector. I think where you have in the States, where you will have a specific lightning venture capital firm, they'll only look at lightning products. Or they'll look at IT products, for instance, and you will have 30 individuals qualified in that IT space. So that's where you really get that hand-holding and expertise to help you develop your product from that sort of early stage into a later stage. But I still think in a private equity venture capital, you still come in with a lot of expertise in terms of strategic alliance. I think more financial acumen. A lot of these entrepreneurs that we meet they're born entrepreneurs. They want to do it today and they want to make money yesterday. And I think where we come in is obviously hold their hand a little bit, get the corporate governance correct, get the financial acumen up to speed, because it's always lacking. Really, that early stage, the first thing a business lacks is probably that financial expertise. Either they've got a bookkeeper or the guy's wife is doing the books. They haven't really developed that part of the business because it's not important. A lot of these entrepreneurs are not. They're sort of self-made individuals.
They're ideas people.
Exactly.
They throw balls in the air, and they need people to catch them around.
And that's what we would do. We would bring that structure. We would employ sort of qualified CAs to come in and help the entrepreneurs. And we'd work with the guys. On a monthly basis, we would go in, sit with the individuals. Where's your business plan? How are we tracking? What do we need to get it to the next stage? But by no means, I think in South African private equity developed at a point where we're so specialized, JP. I mean, correct me if I'm wrong.
Yeah, I think you're right.
But I've seen some of these VC firms in the States, and they are only specialized in one sector. It'll be retail in clothing. Okay, that's it. But we don't do that here.
I want to come back to something here, because two other issues have come out. Now, you see, I wanted to talk about private equity. And now you people are bringing up all other subjects. Something that I want to bring up here is how you actually hold the hand and guide it. And how that's as the private equity or venture capital partner. And how, as the entrepreneur, you have your hand held. Because in my view, and I know this from experience, I'm more an ideas person as well. I'm not good with the nitty-gritty. And I don't like having the nitty-gritty around me. So if somebody's going to hold my hand, they're either going to have to handle all the nitty-gritty, or they're going to have to be very pretty. Okay, so that's what I want to come to in just a moment. We're going to start holding hands here in a moment. It could get very dirty. We'll see you later.